Hello everyone, welcome to my trading recap for yesterday actually. It was the 27th of January, now it's the 28th. I just didn't record yesterday because I kind of forgot, but that's okay. I won't make an excuse for it, I just simply forgot. So, coming into the day, my main bias was bullish. As we can see, well prior to that, right, as we can see, we left a lot of bullish PDAs and we kind of had like really good draw on liquidity to the upside. Just ignore that as well. Hate that it shows it. But basically we had equal lows down here. We had a 15-minute intermediate low as well as like an hour and 4 hour blocks. Sorry, gaps, I guess, bullish gaps. So and then when we look above us, we have equal highs and a unfilled 15-minute, which is really good. Cool. I'm like, great. So we have our narrative, and then we have our kind of like objective for the day, which is reaching out these 15-minute highs. One thing I wanted to note was that I wasn't strictly bullish. Like we were bullish for the most part, but we had equal lows down here. So I really either wanted to see one or the other swept out because we have equal highs and equal lows. So either my condition was either we go higher, like this, or we go lower to sweep out each goal that we had, right? So sweep into the equal lows, trade towards the 15-minute unfilled, or we can go and trade into the 15-minute and equal highs and trade down to the equal lows and other PDAs that weren't tapped into yet. Which I was like, great, cool. The only thing is that I was leaning more bullish because we had a lot of low resistance liquidity to the upside. So I was like, great. Now, spoiler alert, coming to the day, I took one trade. One I kind of faded because of my rules, and I'll tell you about it later. But that was my plan for pre-market, so I will tell you what happened coming into the day. So I waited. It is now 9:26. Wait. The market opens. Now, market opens. We sweep into the 15 equal lows. So we sweep into the 15 intermediate low. We sweep into the equal low. And then we tap into the hourly and I believe 4 hour as well, which is great. We left a 1 minute gap right here immediately after market opens. We close and then market opens and we trade higher immediately. I was like, great, cool. I called that. I'm going to enter it because I liked what I saw. Equal low, intermediate 15 or intermediate low of the 15-minute gap. We stepped into the hourly. We have strong draws above us. We had equal highs. Like literally, look, bro, 3 stacks of equal highs. That is amazing. Like on the 1 minute, just on the 1 minute, that's amazing. That's really good draw on liquidity. Like amazing. ES. This is kind of outdated for ES because this is the 28th actually, but ES was kind of on the same page too. I was like, great, cool, awesome, fantastic. So I entered it, but here's where I messed up. I entered it too late. And what I mean by that is I entered around here. Because at the same time, I was literally typing up the stop loss, like the take profit. I was like doing all these things with the trade option. Well, don't worry about that. I'm in replay mode. But like, I was literally doing that with the trade option, like here. I was literally trying to place a trade. And oh my god, I'm literally messing up right now. Thank you. Yeah, I was trying to place a trade. I was trying to place my stop loss, and I entered where I basically over leveraged my size, which is not what you're supposed to do when you're a profitable trader. But I did it anyways. And the reason why I did it was not because I chose to out of greed, but it was because I was tunnel vision and I put the stop loss or the contract size that was meant for this, right? So imagine this number was like 17 or something, right? I was supposed to enter 17 contracts here, but since I entered up here, it was going to be like 14. So instead of risking $500 per trade, because I'm trading on an eval account right now, I entered with way more risk than I was. It's 1% risk, one trade a day. That was my kind of go-to for a long while. And now I'm kind of switching it up, which I'll explain like after the whole thing. But yeah, so like I basically over leveraged and just like completely just missed my chance. Now let's say for this though, right? This was still a valid trade because if I entered exactly where I said I was going to enter, right? And I only did it for a 1-to-1 RR. Bang. Would have hit completely. But I didn't. I entered up here. my stop loss was like right here, or my take profit was like up here. Obviously, it didn't happen, and guess what happened? Bang, 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 boom, shot to my straight to my stop loss immediately. This was such a big loss for me. I'm actually like very mad at myself just because I didn't really notice it, and like it was just like a human error mistake and a technical error mistake on my part. Like it's just completely my fault. But oh, and one more thing that I failed to notice is that thank you Blake because he told me this for the trading thing is that this is actually a 5-minute intermediate high. Why? Because we have a 5-minute intermediate high on M and Q. What is this? An intermediate high. Boom, immediately got stomped out. Sorry. Right, what happens after we immediately take it? Boom, turtle soup, because, you know, we don't displace higher above it. We go lower, and we end up sweeping to the bullish PDAs below. Which is also another reason why I believe that the trade and everything was still valid, because we still had, you know, really big imbalances below us, like 4 hour, 1 hour, all those good things. So my bias was still very bullish. But I missed my chance, you know, it is what it is. I just have to learn from it, and it sucks, but it is what it is. So, continuing from there, right, market opens up a 5-minute. Please don't make any noise. I will have to close this. So, market opens a 5. Now, 9:40. Close. 9:40 closes, we open, and then from there, we get a close. This 5-minute fair value gap. Don't worry about this for now. One thing that I will say about this trade is that I should have entered it if I did not trade this. In my eyes, I probably would have faded it because I saw NQ did not close. This is not a close. This is a very, very on the line close. So I was not confident in it. But look at M and Q. What did we do? What did we do? 9:45. We closed above this. Same gap. We closed above it. So in my head, and the new rule that I'm actually gonna start doing is that looking at both indexes with like the micros and minis, if one like index gaps above like the fair value gap and it's a possible inversion, I will take it. So let's say that this gaps it, or sorry, this like kind of doesn't close, but this closes, then I probably will take it, because at the end of the day, it's like the main draw, right? It's like if one gap closes, then the other should. I mean, eventually, it's like there's still some minor like contract differences between the two, but overall, like the I don't know what it's called, but like the thing is the same. It's the same kind of like sentiment around it. I suck at explaining stuff. It is what it is. But you know, you get that gist. Like, if one index closes and the other kind of doesn't, then I'll still enter the trade because, well, obviously it's a stronger draw. But yeah, price closes above and we go to our intended TP. Oh, but good 1-to-1, targeting this good 1-to-1, break even at this 15, and then we just eventually go higher from there, as we can see here. Please. So we just go higher and higher. We sweep into this 15 or this 5-minute, and then we continue higher. But we don't really have any other draw on liquidity. So yeah, that's my bias on the day. Yeah. So I guess I was gonna talk about the psychology bit, but it is a crushing blow, man, to see your bias correct, but you're wrong. You know, you have the wrong entry, and that is the nature of trading, and it just happens, and you just have to move on with it. Like my bias was correct on the day, but what I failed to notice was that, you know, we had the wrong entry point, right? Price wanted to go lower and then push higher, but I think I made this move out of fear, and that's a big no-no, you know, because I thought price was just going to shoot straight up to my TP, and then I'd have to like find some other thing, you know, especially when we shot into both areas, so it would be like kind of like ping-ponging. But at the end of the day, it's a lesson learned, and it's a really, really hard lesson learned. But it's a lesson, and that's just what it is. Take it for what you will. You know, 700 doesn't really mean in comparison to like the knowledge that you have to to give, or the knowledge that you have to like pay in order to succeed in life and succeed in trading. So I don't know who will see this from now, but basically life lesson is don't trade market open immediately because you might get stomped out. Well, I don't want to say that, but make sure to look for intermediate lows and highs on both time frames and just make sure everything is correlated and you have a strong bias and conviction. Um, if not, just wait for a stronger setup. You know, this 5 minute was great because it was the highest time frame and we still had our drawn liquidity intact. So I should have just waited for that and traded that. And that is whatever. It's whatever. Like, you know, it is what it is, bro. Just gotta keep moving forward.